Alright class, welcome to chapter 7. In the last class we talked about recording our transactions in the general journal, and now we're moving on to posting those transactions over into the general ledger. Okay? To walk you through where we've been and where we're going, pretty much we started with verifying our source documents, taking a look, those were our invoices, our check stubs, our receipts, and our memorandums, seeing what happened, what transactions took place. Then we analyzed them to figure out which accounts were affected, also which accounts we would debit, which ones we would credit, increase, decrease. Once we got that, we recorded them in what was called our general journal, and that's what we did in the last chapter. But now we have to take that information and we have to move it over and post it to our ledger. So let's look at it. Posting is the process of transferring information from the journal to the individualized general ledger account. So all we're doing is taking the information that's on the general journal, which has all our different accounts. It's kind of like a mix match of everything that took place, but it's really hard to analyze that because it doesn't have it all separated for us. And what we're doing in this chapter now is we're taking that information from the general journal, and if cash was affected by that transaction, we're going to go ahead and move that information into a cash ledger, an individual account where we can analyze it. If capital was affected, we're going to move it over into the capital ledger, and we're going to do it. I always like to give you guys a picture of it's kind of like you're doing your laundry, right? So you go to the dryer, you have a basket, and you just put all your clothes into the basket after they're dry. So you can have your socks and t-shirts and jeans and shirts and everything into one basket. That would be your general journal. Everything's all together, but that's not very convenient for you to be able to go and find things, right? To organize. So what you do is you take all your socks and you put them in the sock drawer. You would take all your t-shirts and put them in your t-shirt drawer. You would take all of your pants and put it in the pants drawer. In accounting, moving stuff from the general journal over to the general ledger is basically the same idea. We're taking everything that affected a certain account and we're just putting it in a place where we can access the information quickly if we need to, so that we can analyze. And that process is called posting. Alright, so the general ledger is a permanent record organized by account number. So we went through and we know that all of our accounts begin with a certain number, right? Our assets start with 1, our liabilities start with 2, our owner's equity accounts start with 3, revenue 4, and expenses are 5. So that's a way that we can organize to keep everything in order, so when we have the need to go and find the information, we can easily access it, get access to it. Alright, so this should look familiar to you. Up here we have our general journal, okay? And like we did in the last chapter, we just took the transaction, the two accounts that were affected, we listed the debited account first, and we wrote the debited amount. We then listed our credit account, we indented it a little bit, and put the credited amount. And then finally we wrote the source document if we need to verify where we got it from. So that's where we stopped. But now what we have to do, like I said, is we need to organize that information. So we need to go to the individual ledger accounts now and pick out what took place. So to begin, what you do is we have a chart of accounts, a list of all the accounts that we're going to use inside of our business to keep track of things. Remember, we have a transaction, so we have to pick from that chart 2 of the accounts, sometimes more, but 2 accounts typically that are going to be affected by that transaction. So you make a ledger. You're making one sheet of paper or one kind of index card or one folder almost where you would keep track of that individual account every time that account is affected. So to begin, all you do is you list all of them in order. So you would go down and you would start with your assets and list them, write the account title and the account number. Then you would go to your liabilities and do the same thing. So picture you have one of these are just minis, partials, ledgers for each and every account that you have in your chart of accounts. Alright, so you see here we have Cash and Bank as the account title, and then over here it tells you that the number for Cash and Bank is 101. You would have Capital as the next account, and then over here you would see the number that's associated with Capital is 301. Just listing them in order by account number. Alright, so now let's go ahead and take a look at one of our general journal transactions and let's post it over to the ledger. So the first thing we have to look at is we have to figure out which 2 accounts were affected. So we'll start here. Back on May 1st, Cash and Bank and Capital were the 2 accounts that were affected. So now let's go and find their ledgers. And you can see I kind of pulled them up here so I can show you on the screen. But Cash and Bank is here, and this is our Capital ledger account. So let's start moving some of the information. The first thing that you have to do is enter the date. So when did this transaction take place? This transaction took place on May 1st, so the first thing you would do is put May 1st over in the date column. Next we have a description column. Typically you can leave that blank. We know where it's coming from, and if we need to reference it, we can always go back to the journal for source information. So the description we would leave blank, but now we have this column that's called the post-reference column. All post-reference means is we want to know where we got that information from. So as we can see, we're taking this information from the general journal and we're taking it from general journal page 1. It says 1 on the top. So the post reference we would put G1 to show that we got this information for this transaction from General Journal, page 1. Okay, so next we have the first set of columns. We have debit and we have credit. And we have to decide what these are for on your ledger is whatever happened to this account, so in this case cash and bank, on the journal, that's what we would put in this column. So if cash and bank was debited on the journal, we would put it in the debit column. If cash and bank was credited in the journal, we would put it in the credit column. The first two columns are used for whatever happened in that transaction. So if we look back, we can see that cash and bank was debited for $10,000. So since we know it's on the debit side here and it's $10,000, over here, we would do the same thing and we would put $10,000 on the debit side. Okay? But now this next set of columns is a little bit different. It has the word balance on top. And that's because we're constantly keeping track of what the balance is of this account. So if this was the first transaction in cash and we don't have a previous balance, we would just need to take that $10,000 debit and move it over to the balance. Now here's one thing. You only will write down on the balance columns the normal balance. You will only write the amount in the normal balance side. So we have to ask ourselves, cash, it's an asset. The normal balance side is a debit or credit. And we know that all of our assets, when they go up, we write the amount on the debit side. So in this case, we had a debit here, and we know that the balance is kept on the debit side, so we would simply move it over and write it here in the debit column. So if you wanted to look right now, whatever the last number is in the balance column, that's what gives you your balance of that account. So I could say just by looking at the cash ledger account that the balance we have in cash right now is $10,000. Okay, but we're not done. Now we have to go back up here. Remember that column in the General Journal that we left blank last chapter? Now we actually have to fill it in. So the post reference on the General Journal wants to know, well, which ledger account did you put that information in? And we know cash and bank, the number is 101. So what we want to do is now go back up and post 101 on the General Journal to say that's where we put the information. Okay? But that's not it. We have one more account, right? So the second account that was affected on May 1st was capital. So we go through all our ledgers until we get to our capital account, and now we have to post it the same way. So the first thing we have to do is write the date of the transaction. So we know that this transaction took place on May 1st, so we would put May 1st for the date in our capital account. Next, we look at the description. We can leave the description blank, it's fine. But now we have to get to our post-reference column. So where do we get this information from? Where's the information that we're putting in the capital ledger coming from? And if we look up here, we know that it's coming from our General Journal. It says General Journal, and we also know that it comes from page 1 of the General Journal. So, for the post-reference, same way, you would put G1. That's where we got the information from. Now we move on to our transaction columns. And in our transaction columns, remember, we're doing whatever it is that we did in the General Journal for that account, that's where we would put it here. So if we look at capital, did we debit or did we credit capital? Yes, we credited capital for $10,000. So when we come down here, in the first set of columns, we would do the same thing. We credited here because that's what we did up there. The next question we have to ask, though, is what is the normal balance side of capital? Does it have a debit balance or a credit balance? When it increases, which side do we write the amount on? And we know that capital has a credit balance, so we would take the current balance and we would move it over into the credit column. So if I wanted to know what the owner's claim to the assets were or the value of capital, I could look here and whatever the bottom number is for my last transaction, that's what it would be. The balance right now is $10,000. Okay? And that's how we post. We got one more step though, right? Last step, you need to take the information from the ledger and bring it back to the journal. We just got to tell the journal, this is where we got this information from or which ledger we posted it to. So in this case, we posted it to the capital ledger, and we know that the capital account number is 301, so we got to bring it up here. And that's it. That's what it takes to post the information from the General Journal over to the ledger. Now it gets a little bit more complicated as we have multiple balances, or we have multiple transactions rather, inside of the ledger. So we're going to take a look at what happens if we have some multiple transactions that we need to navigate towards. So if you were to look up here, the two accounts that were affected in the General Journal, so this is the General Journal, page 1 up here, we see that office equipment and capital were the two accounts that were affected. So what I did is I brought office equipment here and I brought capital here. Normally they're all listed in order and you have a long sheet, but so I can show you guys on the board, I pieced out office equipment and capital. So let's go ahead and start posting some of this information over. So we find our office equipment. What was the date of this transaction? We can see over here that the transaction took place on the 6th. So we would start with March 6th. Next, it's going to ask us, where do we get the information from? And we know it's General Journal, page 1. Now we have to look and say, all right, well, was office equipment debited or was it credited in this transaction? We know that it has the $100 on the debit side, the left side, so that's exactly what we need to do in these columns. These first two columns always show you whatever it is that you did up here, whatever transaction took place on that date. These are the transaction columns, so you would go ahead and put $100 there, okay? So let's look at our balance column, which is over here. It shows us that right now, our office equipment, the value of our office equipment would be $3,000. But in this last transaction, we just debited office equipment. So now we have $100 more. So if we started with $3,000 and we just purchased another $100 worth of office equipment, our new value or the new balance of office equipment would be $3,100. So we just take the $3,000, add the $100, and update the balance, and now we have $3,100 as our balance. We would never write anything on the credit side here because office equipment is an asset and we only keep track of balances on the normal balance side, which is your debit side. Okay? Last step, we got to go and bring our post reference back. We have to tell the General Journal that we posted it in account 120, which is our office equipment. So that's what we did for office equipment. Now let's go to the next one, capital. So we're back to capital, right? And capital, we see on our General Journal that we credited it for $100. So let's go down here and take a look. The date of the transaction was on March 6th. So we would start by putting March 6th here. Description we can leave blank, but where did we get the information from? We got it from Journal page 1. Up here, did we debit or did we credit capital? We credited capital, so in the transaction columns, we would do the same thing. We would credit it for $100. Now, if we look over in the balance section, it shows us that we previously have a $5,000 balance that went over on March 1st. But now that we just increased it $100, the new balance in capital would be $5,100. All we did is take this transaction, the amount, and we added it to our previous balance, and then we brought down the new balance. Okay? We would never write anything in the balance section on the debit side for a capital because we don't have the normal balance side is credit. And then we have to go back and put 301 to show where we put it. All right. Same concept here when we go to cash and bank. We start with cash and bank, debited $6,000, and rental revenue credited $6,000. So we go through the process. The date was March 8th. We got it from General Journal page 1. We debited here